Welcome back to today's more report on Tuesday the 9th of February with me, Richard Perry Market Analyst at Antec Markets. Let's have a look at dollar yen now, and this is the big chart. This is the big mover chart, I think, of the moment. Look at this decline that we've seen in dollar yen. We had that. I mean, people were talking about how massive that sharp move was up on the BOJ. But look at the subsequent reaction to the downside on dollar yen. Huge drive into the yen as a safe haven, and that's seen a reversal of 2150 or thereabouts down to today's low of 1420. So 700 ticks of downside. Incredible move in 7 sessions, that is. That's just ridiculously large. But you haven't even got an oversold condition. I mean, you're still looking at the RSI just in the 30s. MACD lines have only just crossed over. Stochastics have only just moved into negative territory. So, I mean, there is still the prospect of further downside, and that is the concern. I mean, obviously, we've had this rebound early doors today, which is already rebounded over 100 ticks. However, you would argue that it's just basically unwound back towards sort of an old breakdown level, really. That old sort of 1550. You can't really see it on the hourly chart, so I don't know what I'm doing that for. But yeah, 1555 was the old sort of late 2014 support from December. And we've just basically rallied back to that. And that has completed this move here. If we get a close below 1550, I mean, that would confirm that we've got just this massive top pattern, which, if you measure it, could arguably give you a target of sort of 107 area, and it's just huge downside potentially. And look at this this run higher that we had in Q4 2014. How quickly that went. So there's no real support to come in until you get back at like 110 area on this dollar yen chart. It's incredible. So I mean, you've got this mine alert 1385, which was, if I zoom in, you can see it a little bit better. Yeah, sort of that low there, reaction low. I mean, it's nothing. In the context of where dollar yen is, it's nothing. The resistance that comes in, the support that comes in is 10 figure. So there's no real support. Now we're below that. If you start to sort of trade confirming the move below this breakdown level of 1550, there's no real support until about 110 area. It's incredible the downside that we could see. Now, in terms of your reaction, well, you've had a slight unwinding, and you've got a slight bullish divergence there on the RSI. MACD lines crossing over, stochastics rising. So, I mean, that's suggesting that we could get a bit of a technical rally. It is possible, and considering how oversold the near-term prospect was, or certainly the downside that we've seen in the recent days, there is that's certainly not outside the realms of possibility. However, 1650 is sort of the first line of real resistance that comes in. That old support turns into new resistance. You've got a minor level at 1585 for the reaction high yesterday, but I'd say you're massively selling into strength on this chart. I think it still looks really negative just across the board, and that is a real concern for me. The negativity that we've got in this chart. So anything up into that sort of resistance band between 16 figure and 1650, I think that's a chance to sell, because I think we're going to get further weakness. But with that in mind, I wish you good luck in your trading on dollar yen, and I'll speak to you later. Thank you.